A very good afternoon to our guest of honor today, our mentors, and all the Millennium Mams present today. Welcome to our session with Mr. Rajiv Sabharwal of Tata Capital. Let me start with a brief introduction of our organization. Millennium Mams is a not-for-profit organization founded in 1993 by our mentors, Mr. Vishnu Dhanuka and Mr. Sanjay Bhuwania, with the sole aim of creating financial independence and awareness amongst women. The organization has multiplied many-fold and has touched the lives of more than 6,000 women till now, giving them an opportunity to build financial acumen. The curriculum imparts financial knowledge through the study of current affairs and business dailies, analysis of balance sheets, attending AGMs, tracking of global and economic trends, and factory visits. We have chapters in Kolkata, Mumbai, and Bangalore. Coming to our guest of honor for today, Mr. Rajiv Sabharwal. He is a B.Tech from IIT Delhi and a PGDM from IIM Lucknow. Has over 30 years of experience in banking and financial sector industry. Mr. Sabharwal is currently the Managing Director and CEO of Tata Capital. He is also the Chairman of Tata Capital Financial Services Limited, Tata Capital Housing Finance Limited, Tata Securities, and Tata Asset Management Company Limited. He has served as an Executive Director on the board of ICICI Bank, where he was responsible for several businesses, including retail banking, business banking, and rural banking. He has also served as the chairman of ICICI Home Finance Company Limited and was on the board of ICICI Prudential Life Insurance Company. He has been acknowledged for his contribution to the growth of retail banking and real estate and housing finance market in India. Mr. Sabharwal has the experience in both venture capital and growth capital investing at Sequoia Capital and True North. He has also served on the committee of RBI and IBA. Friends, there is a lot going on in the NBFC ecosystem in India at this moment. There is a plethora of fintechs and financial service startups. Rightly so, because of the huge scope of penetration in this sector. To decode this and many more things, we have the privilege of having Mr. Sabharwal with us, a veteran of this sector, to share his expertise and his future outlook on the NBFC sector. Welcome to our session, sir. Over to you, sir, for your keynote speech.
Thank you so much, Preeti. I have a sense of the audience, but I really don't know what exactly you would like to hear. So if I have made a short presentation, but if any of you, wants to state something what they would, want me to cover or want me to elaborate a little more on, I can hear them and then start it. The presentation won't take long, and then if there's anything I can answer, I can do that. But if any of the audience members would like to specifically say or state what they would like to hear, then I would get a sense of what you want to hear.
So we would like you to speak on the NBFC, the future of NBFC sector in India, as discussed. And sir, then it will be followed by Q&A. So the members will have the opportunity to discuss their queries and ask you.
Sure. Okay. So let me share a short presentation. Host has disabled participant from screen sharing. I don't know.
Yes, sir. Suggest. Anjali, can you make sir the co-host? Anjali
is coming.
Okay, let me, yeah. So let me start, till that period of time, just to give a brief sense on finance. While all of you would know about this, maybe it's a repetition, but just to give you a sense, for any economy to grow, finance is, on the bedrocks of that. And only if finance is available, you will realize in any economy that growth gets supported. Whether it is an industry, somebody putting up a plant for manufacturing, they would need finance. Whether they are SMEs who are trying to, either produce or provide services, they will need finance. And similarly, individuals, we all know that, our lifestyle changes when we own a home or when we acquire a car or when we acquire other assets. So finance in some way is a bedrock on which progress happens. And we have seen that in economies which have strong financial support systems like banks or NBFCs, there the growth is far better than in those economies where it is not available. Because it's not only that financial systems or institutions should be there, they should be well spread out across the economy. For example, you may have banks in Africa, but their distribution reach is so poor that, the availability of finance may be available only in few cities and not across the country. Uh, I'll tell you, once, I'd gone to these markets in Africa, and, setting up a branch there was very expensive. They had to actually put up bulletproof glasses in bank branches because of security reasons. And because of that reason, the cost of setting up a branch was very high. So if the cost is very high, then you don't put up many branches. If you don't put up many branches, then the availability reduces. So then alternate forms of financing come up, which may not be cheap, which happens even in India, even in some parts of India, it happens. If you go deeper into the markets, why do money lenders thrive there? And money lenders lend at rates of closer to about 100% per annum. So why do they thrive? They thrive because the formal systems of banks or NBFCs have not reached there. That's the reason it happens. And not only does the money become expensive, it is unavailable. And if it is unavailable, small businesses can't start, they can't grow. And then you are more dependent on, let me say, goods moving from bigger locations. And people also migrate from smaller locations to bigger locations because, finance is not available, quality of life is not the same. So that is what happens. And so that was one big reason why the government always keeps pushing banks and NBFCs to go deeper and to provide more financial inclusion. The other thing, which is also true, is that if too much of finance is available, and then people get more indebted, then the debt on them grows, like it happens in some of the highly developed economies, where at times, because individuals have taken too much debt, they cannot pay. And since they cannot pay, they default, and then action happens on them. So somewhere we need to strike the right balance on that. In India, we are far away from reaching saturation. We are much, much lower than that. And you would realize that, we were today having a meeting, and we were saying we are in the financial services business. We provide housing finance, and internally when we speak, we say, it's so easy to get finance. Our processes should become even more easier so that we become more competitive. But when we go and talk to customers, some of the customers are just happy that their home loan got sanctioned. They really bless someone who sanctioned a home loan. And I can tell you this, about 25 years back when I took a home loan from HDFC, I had to stand, go 3 times to their office, wait for a long period of time, and things have changed from that point of time. But still, even when I got that home loan, we were so relieved as a family, and me and my wife, that we've got a home loan and now we can buy a home. While things have changed, the fact still remains that most of the people are still not sure whether they will get a loan or not, and that is what we, as providers of finance, whether it is banks or NBFCs, have to ensure that availability of finance is there in all nooks and corners for everyone. That should be our objective. The other point, which is also true, is this, that if an economy is growing at a particular rate, for example, if GDP of India is growing at, let's say, about 8%, if we are growing, then we will realize that the finance market or the credit which we offer to customers will grow at somewhere between 2 and 2.5 times of that. So if India grows at 8%, you will see that the finance market will grow at somewhere between 16 to 20%. So for example, this year now, if the credit is growing at 13%, we are seeing that the economy is growing at about 7.5%. So somewhere close to that. These are all approximations, but these are like thumb rules on when we try to estimate that if we know that the GDP is growing at this rate, the finance market will grow at so much rate.
Right.
So I'll switch to my presentation. Yeah.
Yes, sir.
So let me know if it becomes visible.
Sir, it is visible.
Okay. So this is to just let me adjust. Yeah. Okay. This is just to give you a sense of the economy. This is something which you would have also read in the newspapers, that last year was a very difficult year. FY21, not last year. The year before that, where we got hit by COVID. COVID started sometime in March 20, when the lockdown started. While we did cross the year of ending March 20, but the next year seriously got impacted, and our economy degrew, and most of the global economies degrew. Because of the fact that there was degrowth and there was a low base, the economy bounced back in financial year 22, and we grew at about 8.7%. The good part, and what happened during that period, and why the economy could bounce back, and we can see it why probably India bounced back faster, was both the government and the RBI worked in tandem to ensure that whatever support was required for the industry or for the individuals was provided. While we did suffer on the healthcare side, on the financing side, largely what was required by the economy was provided. And that was the reason why we saw a bounce back happening. And we did again see a lockdown for a certain amount of period when COVID-2 happened. But that was for a quarter or so. And then again, we saw a bounce back happening in the economy. The indicators through which we track a lot of this are some of these which we have stated on the right-hand side, which is either Gst Collections. If you see, they have been growing even in June was, a record collection of closer to 1.7 lakh crores. And we see, that being on the uptrend. The unemployment rate has been in control. The manufacturing index is improving. Similarly, a lot of indicators which point towards the fact that the economy is bouncing back, still is robust, and we expect this year also to grow at somewhere closer to about 7.5% plus. If you remember, when COVID happened, there were a set of industries which suffered a lot, and they saw shutdowns happening, like airlines, the hotels industry, schools, colleges, marriage halls, and some of these industries really faced a very strict shutdown. Eating out, for example, was not happening, and we saw a real slump in those economies. But parallelly, there were a set of industries which actually zoomed during that period, and saw, uh, like, for example, technology, digital. These industries really boomed during this period. Similarly, we also saw banks and financial services industries doing very well during that period. And all of this, while the industries which have been doing well have continued, we've also seen a bounce back of industries which were shut. People today are traveling as if they've never traveled before. People are going out and having holidays like they have never have had before. I'm sure all of you would have gone for a break during this period, and you would have found all hotels to be chock-a-block.
Yes, sir.
So everybody, seems to be, spending a lot of money. So some of the industries which were doing well, they've continued to do well, and the others which were not doing well, they seem to have bounced back. And all of that is leading to a situation where we are seeing the bounce back in the economy much stronger. Even in terms of house sales or car sales, 3 years back, if I would have asked you, is there a waiting period for any car? People would have laughed at us. But today there is a waiting period. We never thought there would be a waiting period to get a car. Similarly, house sales, they are like selling as if money really doesn't matter. So all of that is also helping the industry to which I belong, the financial services industry, because all of that needs financing. And since all of that needs financing, the demand for money is going up. And since the demand for money is going up, there is more lending which is happening. So these are some of the factors which have helped the economy. I think if I have to pick up some of the things, one is, I think we as Indians really, have a very strong belief that we can bounce back, whatever industry we belong to. That has helped. And secondly, I think the RBI and the government have worked in tandem to make money available more easily, which has helped the industry to bounce back in faster. There have been more challenges also in the industry, because of which some people have benefited and some people have lost out. For example, because of COVID, a lot of supply chains got disrupted, meaning goods moving from one country to the other were not moving the way they were supposed to. China has put a strict lockdown, so production capacity there also went down. It's now opening up, but it had suffered, because of which prices of certain commodities really shot up, like steel, copper, any of the metal prices really shot up. Anything for which we were dependent on imports really shot up. And because of which, what happened is all the steel companies saw profits which in their lifetime they would have never seen. Those were the amount of profits. But the price of that was paid by the people who use steel.
Yes.
Whether it was the car industry, whether any other industry which uses metals, or they paid the price of it. So in the economy, if some industries do well, we should realize that there's another set of people who are users of that are paying the price for it. But that is what happened in the industry. And as I mentioned to you, we expect the economy this year to grow at closer to about 7.5%. Different people have different estimates of the economy. Now, while those things were happening, I think in the last quarter, more changes came into the system because of huge supply of money, and also because of shortages of certain goods, because of disruption in supply chain. The cost of these commodities has gone up. For example, one of the big risks which people talk about today in the world is about food crisis. That, every country doesn't produce what it consumes. It is dependent on a lot of other economies. For example, the countries at war were big suppliers of wheat, were big suppliers of some of the other food items. And because of the disruption which is happening, the whole supply chain has got disturbed. Here, luckily, India scores well, that because we are largely self-sufficient on food, largely self-sufficient. There are certain things like oil, oil seeds and all, for which we still are dependent. But, we are not an economy where, if, let's say, we don't get anything from the rest of the globe, that we will not be able to feed our people. On food science, since we are self-sufficient, that's one big risk which we have addressed, which is not true for a lot of other economies. But since the inflation went up and cost of goods went up, I think one of the primary purposes of RBI is to ensure that inflation remains controlled. Because if inflation runs high, then the poor person suffers the most. And to ensure that that doesn't happen, RBI takes all steps to bring inflation under control. And one of the ways to bring inflation under control is to make availability of credit or loans more costly. So if the cost of loans goes up, if interest rates go up, then the hope is people will not borrow more. If they will not borrow more, they will have less money to spend. They will have less money to spend. The demand for goods will come down. In some way, that is the belief, and that's one reason why RBI is also trying to increase. The another reason why our interest rates are going up is also because of what's happening in the global economy. With US Fed increasing interest rates, we have no option but to increase interest rates, because if we don't, then there will be a flight of money from here to there. Because why a lot of money moves to India is because of the fact that India is a more attractive destination for investment, which means that if you put money in the stock markets, you make more money, you get better interest rates, you move money for debt. In India, India has large surpluses or large forex reserves because of that. We don't have reserves because we export more and import less. Our reserves are not because of our operations. When I say operations, our Reserves would have been more because of operations if we were exporting more and importing less. But it's just the opposite. We export less and we import more. So, our reserves have got built in because of us being a favorable destination for investment, whether on the equity side or on the debt side. And that's the difference between India and China. China reserves are high because they export more and import less. So, and also because it was an attractive investment destination. So they had two positives, and that is why they have their reserves are far more than what ours are. So this is because of this, RBI has increased interest rates, as I mentioned to you. This is some sense of the size of the market. Um, India's size of the market in terms of credit, in terms of loans which have been given out, is about 120 lakh crores now. And on this is the loans given out by the banking sector. If I also add loans given out by NBFCs and housing finance companies, that will be another, let me say, about 30 lakh crores. And then some of the other people in the system. So our total loan outstanding would probably be 160 lakh crores. But banks have given out about 120 lakh crores, and they are the largest player in the industry. And the amount of deposits which we have placed, all individuals and companies have placed with banks, is about 171 lakh crores. And the rest of the figures are the insurance company also has corpuses. Corpuses mean the money which they have received from customers, they invest, and that's about 49 lakh crores. And mutual funds, the amount of money which everybody has put in mutual funds, whether it is individuals or corporates, is about 37 lakh crores. And on the right are the number of players. There are about 33 private sector and public sector banks, and so on. But look at the number of NBFCs in the industry. Close to about 10,000 NBFCs exist in the industry. But if you have to count, probably the first 25 may account for 90% of the business. So it is highly skewed. There are a lot of companies which are defunct, not doing anything. And that is also one area of RBI's concern, where they want to reduce the number of companies which exist there. This is something which I just told you in terms of credit growth, but this gives you a breakup of when I say loans given out or credit given out, where is it going? We know which sectors are absorbing more. So the highest growth of 16.4% is happening in individual loans, meaning loans taken for housing, loans taken for personal loans, loans taken for cars or two-wheelers or consumer durables. That industry is growing at the highest pace. And then the services sector, whether it is travel, tourism, a lot of services or NBFCs, what loans which they are taking from the banking system, that's growing at a healthy rate of 13%. Agricultural loans are growing at 11.8%, and loans to the industry are growing at the lowest pace of about 8.7%. In the industry, because of what has happened during COVID, we have not seen new capacity expansions because the whole production was disturbed and they were not utilizing their existing capacity. So they did not put up new plants for new capacities. That is starting now. And that focus is also coming in through that Made in India campaign of the government. Again, this gives further breakup of where the growth is happening. In services, the biggest growth is happening in NBFCs, which are growing at about 20% or so. Housing is growing at closer to about 14%. And all of these numbers are much better than what they were last year. This is just to show that the growth is happening both on the banking side as well as on the NBFC side. Banks are growing faster than NBFCs. Banks are growing at about 13%, while NBFCs are growing at about 10%. But both of them more or less move in tandem. This is a little more on what's happening in the housing sector. In the NBFC sector. Out of the total loans given out by the auto industry, 47% are given by NBFCs and the balance by banks. In housing, about 35% of the loans are given by housing finance companies and the balance by banks. So it is just to show that while banks are important and they are growing, so is true for NBFCs. NBFCs are also important and they are growing. And both work together to ensure that more credit gets given out to individuals as well as companies. This is, I'll move faster on this. This is just giving what is the growth rate in each of these sectors. Housing finance companies are growing at 10%, NBFCs are growing at 10% again. Gold loan companies have slowed down a little bit. Microfinance companies are growing at about 12% and so on. Now, just to talk a little bit on what is really, what is changing in the whole system. What is changing in the whole system is I would say the involvement of technology and digital. What is becoming very important in all banks as well as all NBFCs or housing finance companies, all of us are spending a lot of money in analyzing the data which is coming to us from customers and also in providing digital front ends so that customers can take our loans or open bank accounts digitally. If you would notice, I remember in 2000, even 8-9, we used to struggle to make people use the banking app. They were not using it. Today, our maximum transactions for banks happen through apps. Similarly, between internet banking and mobile banking, they account for over 90% of the transactions for all banks or NBFCs, you will realize. Most of the transactions seem to have happening there. Almost all of the servicing happens there. I don't remember when I last visited a bank branch or NBFC. Most of the people get service through this. I think the only thing which still happens physically is the loan taking process. While to an extent that is also moved digitally, but there still a distance needs to be covered. Most of us, when we are taking loans, that process is still physical to a large extent. But give it a few years and you will find that this is also moved to the digital channel. And all this is happening because all customers, all of us are also adopting digital channels. For example, I was talking to someone who's in the consumer durable industry. Earlier, whether it was mobiles, we used to go to shops to buy it. Refrigerator, shops to buy. Washing machine and microwave ovens and so on and so forth. But today, a good portion of these transactions are happening online. You're selecting online, you're choosing online, you're paying online, and the goods are getting delivered. Because these are standard items and you get probably better rates in the online world, you are able to. Even gold, I was talking to someone in Titan. I could have never imagined, people buying, even women buying a lot of gold online. But it's amazing to see how people are choosing to buy online products And the reason why people are doing it is, I was told, because the number of options which you have, the number of designs which you see, even on jewelry, you can never see them in one shop as you can see in the online. So this is how things are moving. And since transactions are moving online, we as financiers have no option but to move online because consumers are changing. So that is happening. And so if the area in which we invest the most is technology. So that is what we are doing.
Rajiv, this is Vishnu Dhanuka, Director, Millennium Ma'am.
Yeah.
Sorry to interrupt, but we should have 30 minutes ka question answer session.
Sure. Sure. I'll just 1 minute, I'll just finish this.
Yes, sir.
So I won't take longer than this. So because of this, a lot of new companies have emerged. You would have seen so many names which I have put on the right. These are all digital fintech companies who have emerged, and they are working along. We work with all of them to make services happen. Just the last slide on how do I see the future. One, I think we are still penetrated less on credit, and there is an opportunity for the industry to grow a lot. Digital will become an even bigger portion, and we will see a lot more of digitization happening in the future. I think we all now understand the importance of innovation, and every company is investing in that space. And if somebody has to gain market share, they will need to innovate. The other thing is we are also realizing in financial services, working together helps us do better. So whether we work with banks or we work with fintechs or banks work with fintechs, but partnerships are becoming the norm of the day. And the other thing is, I think we all are going to use data far, far more than what we have used to offer more personalized products to customers. So that is all what I wanted to state. Happy to.
Thank you so much, Mr. Sabharwal. It was a really insightful presentation, giving us the core of the growth for India is finance. This is where the growth actually lies, and this is the base on which India can grow. And there is a lot of scope for penetration. Digitization is the only way. Thank you very much for this session, sir. Sir, can we start our question answer session?
Please.
So I invite my colleague Vasundhara Pasari to take this forward.
Thank you, sir, for the most insightful session. So it's very heartening to see that even in these volatile times, there's still the opportunity for growth remains intact. So we have a lot of questions. I'll start with mine. So Tata Capital reported the highest ever profits during financial year 2022. Dispersals grew by 109% and the loan book grew by 22%. So going ahead, can we expect growth on similar lines, especially keeping the macro headwinds in mind?
This looks like a press question. So, no, I think what is happening is this, that any player in financial services will basically ride on the economy. So if the economy grows, we will definitely grow. I think some players will, and the growth will not be uniform. Some players will grow faster than the others, and we believe we will be on that side where we will grow faster than the others. Looking at what has happened in the first quarter, we believe there is an opportunity for this growth to get replicated or further improved in the future.
Thank you, sir. Swati, can we have your question next?
Good afternoon, sir. Sir, in one of the articles, you mentioned that loan will grow faster than the industry. Could you throw some light on this current scenario with interest rates rising and liquidity becoming less abundant?
Yeah, interest rates are rising, but you should always know that whether it is a bank or an NBFC, we are just traders of money. We
Exactly.
borrow from one end and we lend on the other side.
Okay.
If interest rates move up, they will move up. Uh, the the way the individual looks at it, when an individual is buying a house or buying a car, he or she looks at the price of that product and the financing at what rate it is available. And if that works, things will still grow. And while interest rates have moved up, we still believe they are much lower than what we have seen in the last decade. So consequently, growth is still assured. We should also remember that the average income level of the individuals are also growing. And similarly, since in the last 2 years, a lot of companies have deleveraged themselves, meaning they have repaid a lot of loans. So they don't have many
Yes, sir.
loans on their books. So their ability to borrow has increased. So all of that should lead to a situation where there is growth happening in the future.
Okay. Thank you, sir.
Didi, can we have your question, please?
Good afternoon, sir. Sir, do you feel that NBFCs and banks can be treated at par? There was an article which I read, in which you mentioned that this would help in the rate of recoveries and NPAs. Could you please elaborate a bit on this, sir?
It's not got anything to do with NPAs or or recoveries. I think that is more of an individual company's credit policy or how do they take credit decisions. But I think both will never be the same, banks or NBFCs. Both have a different role to play, and that is how a regulator looks at it.
Right.
Banks obviously have the ability to do more things than an NBFC because they can borrow money also, they can raise savings account and current accounts and all of that. But I think both banks and NBFCs are working in tandem. What we're realizing is NBFCs are spreading more deeper in the country. NBFCs are taking decisions on lending faster than banks. So that advantage is there. While banks have a big advantage on cost of funds, plus more comprehensive services which they offer. So there are pluses and minuses both way, but I think both are complementary to each other in terms of growth. And we should not worry about it because India has huge opportunity to
Yes,
grow.
like you said, we are underpenetrated.
Right.
Thank you. Thank you.
Srinidhi, can you come in next?
Good afternoon, sir. Sir, you mentioned working together is in a big advantage. Under the umbrella of Tata Capital, you provide NBFC and AMC services. So what is the advantage that you have over a specialized NBFC player or a specialized AMC player?
Actually, these are two different businesses, and there are Chinese wall between these businesses. The regulator always ensures that each business is, works on its own. The difference between some of us and others could be in terms of comprehensive nature of things. For example, if there is a gold loan company, they offer only gold loans. If there is a microfinance company, it offers only microfinance. Or if there's a housing finance company, it offers only. But as an NBFC, we offer everything. And like us, there are other NBFCs also which offer everything. Like Bajaj, like Aditya Birla. So they also offer the whole spectrum of products, which is lending to companies, lending to MSMEs, lending to individuals.
Okay. Thank you, sir.
Meghna, can you come in, please?
Yes. Sir, the Tata Group is going for restructuring in a big way. But in the case of financial services, so restructuring has not yet started. So there is Tata Auto Finance under Tata Motors working independently. So we're not asking you to disclose, but what is in the mind of the group in this regard, sir?
I think our chairman was very clear that his whole thought of any restructuring is simplification and where there is a advantage to be gained there.
Right.
And that is what he's worked on. I think as far as financial services are concerned, each of the businesses have to work independently. That's what the regulator also wants, whether it's insurance, life or general or mutual funds or NBFCs or HFCs. They work separately. Tata Motor Finance is a subsidiary of Tata Motors and largely focused on providing finance to the Tata vehicles. So that has a specific objective. This company has a specific objective. And the way they are working independent of each other.
Thank you, sir.
Manjari, could you come in?
Good afternoon, sir. Thank you for a very, very informative session. Tata Capital has some loan rates at almost 2.5% lower than other leading NBFCs. Why are we not the number one company? By when can we expect this?
So, in an industry, if everybody becomes number one, then there'll be no number 2, 3, or 4. But I would say in certain segments, we are clearly the leader. No company is a leader in each of the products.
Okay.
So there are in certain products in which we are leading, there are certain products in which somebody else is leading. But in almost all products, we are either number 1, 2, or 3. I can say we may not be the leader in all. Our focus has been that growth is important, but more important is responsible growth. We want to be a company which will last centuries. As you know, the Tata Group celebrated 150 years.
Yes.
We want to be a company which will last forever. That's our objective. So while we are growing well, you would notice our loss rates are the least in the industry.
Yes.
So we want to be in that situation where we want to where we want to grow, but we want to grow responsibly. And I feel we have, got that right portion now, and we will continue on that path. For us, I think most important is satisfaction of our shareholders and customers. That's most important.
Thank you, sir.
Thank you, sir. I think Vasu is back.
Yeah. Pooja, can we have your question, please?
Good afternoon, sir. Sir, Tata Capital strategy has been to expand in tier 2, 3, and 4 towns, even as it explores the opportunities in the metros. So could you please share the current scenario of the company, as in where are we placed now?
So our whole idea and why you will see most of the people are trying to go deeper into markets is because competition is lesser in those markets than in big metros. And if competition is lesser, then hopefully you will do more profitable business. So that's the reason most of the people are expanding in deeper markets, and that's our thought also. We believe that there are a lot of markets which are underserved, more underserved than metros, which are in a way overserved. So that's the reason we are growing there, and that will be our strategy of growing more in deeper markets.
Thank you, sir.
Deepshika, could you please come in?
Good afternoon, sir. Sir, you mentioned that 90% of the business comes from the top few players. So, sir, I'd like to understand your thought on competition within the NBFC space, please.
So competition is there everywhere. In India, you will rarely find some of you may be running businesses of your own, but you will rarely find in India any product segment which does not have intense competition.
Right.
Every business has intense competition. And because of this competition, customers gain because
Yes.
the cost of products goes down. And in a way, the quality of service improves. That is what competition leads to. You can see any segment, more growth has happened where there is more competition. That is one way of ensuring that the customers get a better deal. So it is good that there is competition. We are always on our toes. We're always worried about what other players are doing, and that makes us work harder every day. But that's India. That's India. Like I always say, this is the negative side, but look at the positive side. We are all lucky to be born in this country. We're so lucky to be born in this country. Look at the amount of growth. We grow at 8%, 10%. Just imagine that if we were in a country which was growing at 1% or 2%, we would have struggled for jobs. We would have struggled for business.
Right.
So while we all have certain cribs about everything, but we should not forget that we are lucky to be born in this country.
You're right.
Thank you, sir.
Risha, can you please come in?
Yes, thank you, Vasundhara. Good afternoon, sir. So my question is from the last slide, the word called disrupt. So, what I was, I wanted to confirm, you to confirm that even in NBFC, the fittest only can disrupt. So do you think over here also the big will become bigger and they will kind of have a bigger pie of the growing cake? Bigger share of the growing pie, yeah.
So, see, the lending industry works in a different way. And disruption, according to me, is something different. If you look at innovation necessarily does not happen the most with the largest company. Mm-hmm. Innovation can happen anywhere. Innovation is very democratic. It can happen anywhere. It is the idea. If you have a better idea, you can innovate far better than me, even if I have more resources. It's the value of the idea which matters. As far as fittest is concerned, in our industry, fitness is determined by trust. Mm-hmm. Like, for example, if you want to put your money, will you put your money in the largest player or the second largest player, or you will put it where you get more trust in that? Because it's your hard-earned money. You will always look for brands where you can trust. There will be people. Why do some banks offer higher interest rates than the others?
Right.
I'm not saying they are bad, but the ones which have more trust built in them can get more money even by lower interest rates. That's the difference. So, while in certain manufacturing companies, you may say that, scale will determine everything. But in our industry, it's trust which will determine everything. And even you look and see the what difference innovation makes. If you see Tata Motors was nowhere in the passenger vehicle space 3 years back, and look at where it is now. Purely because they really innovated on the new models and they innovated in the EV space. So on the electric vehicle space, they really innovated. So they have taken a lion's share there. Again, innovation is a big leveler. It's very democratic. It can happen anywhere. It can happen with the smallest player also. But as far as scale is concerned, trust will drive scale in this industry.
Okay. Okay. Thank you. Thank you so much. So that was quite clear. Thank you.
Sir, we've had an absolutely enriching 1 hour and we just don't want this session to end, but we value your time.
Vasundhara,
Yes.
one minute. Good evening, Rajiv. Vishnu Dhanuka here.
Yes.
Actually, we organized, Rajiv, two big conclave in Mumbai. There was a proposal. There is a proposal, if you allow me. Like say, we want to organize for only women a conclave in Mumbai again, in collaboration with Tata Capital. So Preeti will be in touch with if we can do only women. Only women.
Sure, we'll be happy to do.
Oh, thank you. Vasundhara.
I would like to invite Jasbir, our committee member from our Bangalore chapter, to give the vote of thanks, please.
Thank you, Vasundhara. The financial industry is vast and complex, with banks going digital and emergence of thousands of NBFCs. One would be completely perplexed with the infinite characteristics of this ecosystem. But sir, you have demystified this labyrinth for us in the most lucid manner. Thank you, sir, for such an enriching experience. I would like to thank our mentors, Mr. Dhanuka and Mr. Bhuwania, for constantly sharing their words of wisdom that radiate a source of energy within us. We will ever remain grateful to you and thank you for being with us today. Last but not least, I would like to thank all our members for showing their interest in today's event. Once again, thank you very much all for joining us.